right, hello and welcome everyone. Welcome to Network 2020 and UNCDF's presentation on digital development using technology to advance global financial inclusion. So as people jump on, we'll get started here with some basic information about who's giving this webinar and who the participants are. So for those of you who are joining for the first time, Network 2020 is a New York-based nonprofit. We are an inclusive international community that's really trying to bridge the gap between the private sector and the foreign policy worlds. And we really try in our work to highlight and drive innovative solutions to key foreign policy challenges, which is why I'm so excited about working with UNCDF, because I think that they are absolutely doing that very thing. And a little bit about UNCDF, we're going to turn to my colleague David right here for a little intro.
Hello, thank you for attending. I'm David McHale, Communications Specialist with the United Nations Capital Development Fund. We are an organization that has existed within the UN system since 1966, and our mandate is to make finance work for the world's 46 least developed countries, 47 up until December. Congratulations to Vanuatu for graduating. Our mandate involves leveraging our capital mandate and our instruments to offer last mile finance models that unlock public and private resources, especially at the domestic level, to reduce poverty and support local economic development. And we do this in three distinct ways. We do it through providing catalytic financial structuring and de-risking for small and medium-sized enterprises, for capacitating local governments through fiscal decentralization and innovative municipal finance and structured project finance. And the third way is going to be featured by virtue of this panel and with my colleague, Sabine Mensah, who will be introduced in a moment, through our inclusive digital economies practice, which works to connect individuals, households, and small businesses with financial ecosystems that catalyze participation in the local economy and provides the tools to climb out of poverty and manage financial lives. And throughout the entirety of our work streams, women's economic empowerment is articulated. It's articulated through our work streams, through all of our approaches, through all of our practices, and through all of our objectives. And I will leave it there. Thanks so much.
Thank you, David. All right, and now to introduce our panelists. So first we have Sabine Mensah, who is a regional digital hub manager at UNCDF. So she is our UNCDF colleague who's joining us today. She has decades of experience working in private sector business development, as well as working for several years at the UN. And you can see some key bio points up on the screen, but she has really been working in the nitty gritty of transitioning digital finance, really has an understanding of what digital finance and inclusive finance looks like on the ground and actually how to get that to work. So we are very honored to have Sabine join us today. Next, we have Anit Mukherjee, and he is a policy fellow at the Center for Global Development, where he works on issues of governance, public finance, and service delivery in developing countries. I point you to a key point in his bio, where he was a policy advisor to the world's largest biometric ID program in India. So he was involved in the design of direct benefit transfer of subsidies in India. So again, some really tangible experience in how processes and technology can help with digital inclusion. So very happy to have him join us today. And last but not least, we have Robin Lewis, who is a senior research associate and associate fellow in the governance studies program at Brookings Institution. She right now works on the Leveraging Transparency to Reduce Corruption project. But I would point to the part in her bio where she worked for several years on Brookings Financial and Digital Inclusion Project reports, which evaluate commitment to and progress toward financial inclusion across a range of countries. And so she has a lot of experience kind of looking across the universe at what digital financial inclusion looks like. With that, I think we are about to start our talk. So I'm going to kick it off. Before we get into some of the details of solutions, I wanted to start with you, Robin, on why this is such an important issue on a global level, and particularly now during COVID. It it's clear that being underbanked and lacking access to financial services poses a huge challenge on a personal level. But what happens when this occurs on a countrywide scale? And how does a lack of financial inclusion impact a country's ability to develop and participate in the global economy? So Robin, if you could just give us an overview about why this is important and why we should care.
Absolutely. Thank you so much, Courtney. It's great to be with you all. And definitely, we know that financial inclusion is a really important ingredient for a more inclusive global economy. We also know that according to the World Bank's 2017 Global Findex database, that about 1.7 billion adults do not have an account at a financial institution or through a mobile money provider. So while there have been significant strides in financial inclusion globally, that number shows that there is still substantial room for more people to participate in the formal economy. So before we talk about the connection between individual finances and the global economy, I thought it might be helpful to break down what we mean by financial inclusion first, since I think sometimes it can be overwhelming to think about financial inclusion at the global scale. So maybe if we think about its components, that will be useful. So what do we mean by financial inclusion? There are a few different definitions, but it generally comes down to these elements, which are access to and use of secure, affordable, quality financial services by individuals and businesses. So for the financial and digital inclusion reports that I worked on, we were mostly focusing on formal financial services among underserved populations at the individual level. So that's useful context to keep in mind, I think. So looking at the individual level, financial inclusion means that people can manage their finances in a way that enables them to do all the things that are so important, like save for retirement, pay for emergencies, pay for your children's school fees, and even invest in small businesses. And we know from the research that inclusion can improve income and increase savings. And that not only has an impact on people's day-to-day lives, but that also contributes to the economy. So essentially what I'm getting at is that, in other words, financial inclusion in and of itself isn't the end goal. It's a mean to multiple goals, including things like supporting people's quality of life and the broader economy. So with that said, I would love to see even more research to help us more fully understand the relationship between financial inclusion, inequality, and macroeconomic growth, because we know that all of these components are incredibly important. And you also mentioned COVID-19. So I know that we're going to be talking about this, I think, in a bit more detail shortly, so I'll keep it brief. But we know that the pandemic has highlighted and in many cases exacerbated existing inequalities, and financial inclusion is absolutely no exception to that rule. We know that groups like women, people with disabilities, and refugees have been disproportionately affected by the pandemic. And these are also the groups that are often disproportionately on the margins of the formal financial ecosystem. So I'll leave it there at this point, since we're going to be diving into these topics a bit more. But one note I will say is that while the pandemic has presented many challenges, I think it's also relevant for us to keep in mind some of the benefits of digital financial services that will be applicable in the context of the pandemic, especially in a time when we're all having to distance ourselves. So I'll stop there, but hopefully that provides a useful overview.
Okay, great. Thank you. Sabine, and is there anything that you want to add to that answer?
Yes, I really would love to. Robin, one of my best friends, when I went to elementary school, her name is Alice, and she's in Burkina Faso. Our trajectories change because she hasn't had the opportunity to go to high school or to university because of lack of finance, access to finance. So for me, financial inclusion is opportunity, is being able to have access to basic services, whether it's education, health, energy, social services. All of these are made possible by opening the door to financial inclusion, by having that interaction with a financial institution or services that can help you safeguard what little you have, whether it's $1 or $2, and help you also have access to additional resources. So you're able to invest in revenue generating activities and access to these services for your kids, for your family. So that is the face and the story behind financial inclusion and why I am in this organization and why I do this work, because I can say that I'm helping make these things happen to millions of people through access to finance. So that's what I wanted to add to what Robin just said.
Oh, thank you. That's a very important point. So it sounds like what we're really talking about is the way we are able to store, transfer, grow money, and really participate in society and the economy in a meaningful way. Does that seem like a good summary? Anit, is there anything you would wanted to add to that?
No, I think that's a great summary. I'm grateful to Robin for giving us a definition, and I think we've been struggling with what the definition of financial inclusion is, and Robin and Sabine gave us that. But no, I think that's a great summary.
Right. Yeah, because it sounds like one of those things that I think we think we know. We're sort of like, okay, I understand, but then you're like, oh, when it gets down to it, do I really understand it? So thank you. That was really helpful. Anit, I'm going to turn to you right now because I know you've done a lot of looking into this next question. We're talking about increasing financial inclusion on an individual level and how that relates to countries' ability to strengthen their overall economic health. And we've mentioned COVID-19 before. So when it comes to financial inclusion, what are some of the most pressing challenges we've seen around the world, and how has COVID-19 exacerbated those problems?
No, thank you. And this is a really important question. And thank you for having me on the panel. I think Robin mentioned that the last 2017 Findex, which the World Bank tracks the financial development across the globe, that showed that about 1.7 billion people don't have access to any kind of financial account. And that includes banks, mobile money, and it doesn't include informal savings and loan accounts. So let's be clear on that. But it's also been the case that from 2011, when they've started tracking the numbers, things have improved, and pretty significantly. And part of that reason is what we are discussing in this panel today. It's digital technologies. Things have moved from 2011 to 2017, when the last numbers came out. The digital part of that financial inclusion really took the center stage. And I'll come to a few of those lessons after that. But on your question of COVID, just to make sure that we understand, the numbers are skewed against developing countries, right? So in developed countries, about 90 to 95% of people have some form of a financial account. But in developing countries, it's about 60% still. It's about 60% of all adults. And within that, women have a disproportionately lower number, a share of financial accounts than men. And therefore, we are looking at this problem in several different dimensions. One is the developed versus developing country, where still things are not as good. By the way, developed countries haven't done very much, very well either. I mean, I was intrigued by US sending out paper checks, and where countries like Togo have been sending money through mobile money and all that. So there's that thing to be aware of too. But I think one big issue has been with COVID is the really severe breakdown in structures of financial transactions, right? Normally you would go to a bank branch or a mobile money agent and be with that person and have a cup of tea maybe, and just and in the end you cash out, or you cash out a check and ask about how the people are doing, how the family is doing. But with COVID, that got kind of completely cut off. So how do you actually make these transactions happen? And what we have seen is that, and the government needed to step in. So people lost their livelihoods. I mean, they were at home. I mean, they didn't have money for their children's milk and food for themselves. So the governments around the world sent money. And like in the US, you sent checks. In Europe, there were unemployment benefits. But in developing countries, nearly a billion or over a billion people got moved into the safety net. So governments in developing countries sent money to over a billion new people. And these were not people who were before in any kind of safety net. These are new people. So if you think of in 4 months, what has happened to this push towards new forms of financial inclusion remotely using remote KYC norms, what we call know your customer, this been an amazing change. And we are still in the middle of that change. We are not out of it. So the hopeful message that I have is that we need to have a better understanding of what those changes are for specific groups, for example, migrant workers who lost their labor or who were women, and use that momentum to go forward to the next stage.
Yeah, just to stick on that point a little bit, because the devil's in the details, right? So, I mean, if a billion people were able to get into this basically a digital payment system for, and I apologize if I'm using the wrong terminology, how was that able to happen so quickly, and why, what were the barriers, for at least from your understanding prior to that would have kept someone? I mean, I understand that the urgent need for paying one's bills and getting the necessities of life, and that kind of prompting that move, but what was the resistance that would have happened earlier, or why would that have not happened earlier?
Oh, great question. So I'll get a bit wonky here. So over in the last year, I think in March of just before the shutdown happened, we at Center for Development, we published a report called Citizens and States, how countries can use digital IDs, financial inclusion, and mobile technology to do better development, so to speak. And what we saw that these are the 3 pillars, these are the 3 digital pillars of a digital economy. So you have some form of a digital identification, which is different in the sense that it's also a verification system. For example, it's not that who I am, it answers the question who I claim to be. So here, and I'll talk a little bit later about biometrics. And so the digital ID systems started propagating across the world over the last 10 years. So a lot of countries had some form of a digital identification. It could be remote, it could be online or whatever. Then you had this expansion of financial inclusion, right? And then you had this amazing growth of mobile technology. So between 2011 and 2020, it's a world of change in terms of mobile technology. And some of the biggest users are not in the US or in Europe, are developing countries. And they understood the potential to use mobile phones and mobile networks and mobile money to move to the really people who really need it. And by the way, most of them have mobile phones. Like if you look at it, even at least a feature phone. And here again, the distinction that I want to make is mobile technology versus a particular type of phone or a particular type of tool. So I think the biggest difference that happened was when governments and donors and people who are designing these programs realized that they can reach these last miles pretty quickly and pretty efficiently. What you needed are the other 2, which is you needed some form of a financial account and some form of a verification mechanism. And where those things existed, I mentioned Togo. Togo used their electoral ID card, which, by the way, has your occupation. So if you said that you were a street vendor, then they just put you into the system and sent you money, right? So different countries use different mechanisms to identify who needed this, right? And then reach it through these tools that were already there. So the necessity is the mother of all invention, right? So the crisis was the mother of all innovation. So it's kind of, that's where we find ourselves. But again, as I said, we need to take this momentum forward.
Thank you very much. Sabine, would you like to add to that?
Absolutely, Anit, I'm there with you. And if you ask me, I would just say we've digitized bricks and mortar. We've brought the bank in your pocket. That is the main fundamental difference. Before you're asking somebody in a rural area to walk or to find a way to do a long distance, an hour or 2 to go to a bank, to line up for an hour or 2 to get service, and then an hour or 2 to come back. That's half a day out of their livelihood. just to be able to go and park their money into an account. Today, via mobile phone, the most basic ones in your pocket with mobile money or digital financial services, we've brought financial services to the last mile, to the closest as much as possible and in your pocket. And if we are able to put all the ecosystem around you as a customer, the vulnerable, the marginalized, the youth, the women, the smallholder farmers, with that ecosystem, we can financially include millions and millions of people. And that's the story that has happened with digital financial services. It's being able to service customer where they are, bringing these services, making them more accessible. Of course, that ecosystem for us at UNCDF is a large part of that story, right? Because if people don't have access, infrastructure, I mean, from the most physical to the connectivity to being able to have access to electricity to charge your phone, you wouldn't be able to do anything if that phone isn't charged. So, and to have identification, like Anit said, to be able to have a digital account, that's a whole story of you having access. And therefore, you open the door to that financial inclusion. And then the second piece of it is use cases and services that are adapted to customers. And for us, we call it the customer empowerment piece. We want to make sure that customers know digital, have the skills to use digital, understand the services that are offered to them, and can decide which ones are the most appropriate for them. And then that pathway to adoption of digital services is enhanced. And around all of that, this all happens in an ecosystem that's regulated with, the regulators looking at facilitating innovations that can fast track financial inclusion, innovations that give access to smallholder farmers, information to, improve their productivity, give them access to finance, and it's all of that ecosystem, and we, the development actors in the middle, really working with partners to make it happen. I just came from Burkina Faso, Courtney, and I'm so happy to see that in our team in Burkina Faso has looked at digitizing savings groups transactions. So you have women's, 30 of them to 100 of them coming together, putting their money together into a box and then dispatching to each, lending to themselves so that they're able to do these activities. So instead of putting that money under the mattress, we've brought in microfinance institutions with tablets so that they're able to collect this information right there on the spot. And then they're able to open an account for these women. In Burkina Faso with UNCDF team and the program PARI, which is innovations through digital, the team was able to collect about more than $200,000 in savings. These savings were under the mattress, literally. And thanks to those savings collected, the financial institution, microfinance institution, were able to extend over $300,000 of credit to women. We've been able to improve their activities and invest more. This is an example of how, we put the ecosystem and the incentives in place, and you will be amazed at the adoption rate and at the story of self-reliance and empowerments that I've heard just last week in Burkina Faso, just to give you an example.
No, it's amazing. And it sounds like there's a real confluence of factors, whether it's the proliferation of technology like mobile technology and also the attendant software that's needed to go along with it, as well as initiatives like biometric IDs or things like that I think in the US we're just not experienced with at all, and the rest of many other parts of the world are light years ahead. But it sounds like it's that confluence that is really allowing this to happen. Just a reminder, I see people putting questions in the Q&A box. That's terrific. We'll be getting to audience Q&A soon, so please do feel free to put your questions in at any time. Sabine, I want to stay with you for a minute. I'd love for you to, if you wouldn't mind just expanding a little bit on both the client-centered approach that you're taking and also how infrastructure barriers might manifest themselves and what that looks like, just so that those of us who aren't experienced in this field can get a better sense of what that looks and feels like.
Sure. Let me give an example of a micro entrepreneur with a mom and pop shop in a rural area, right? This micro entrepreneur, let's say this one, is relying on the cash that she has to get all of supply, and then she sells to her customers. She needs more resources, but because she doesn't have a credit history, because the bank or the microfinance institution has no information on her or her business, it is very difficult to estimate, what's her need, what's the working capital need she has, or it's very difficult to extend credit to her without asking her for, have you heard, 150%, 200% guarantees are asked in some countries in West Africa. So now picture today with crowdfunding. Technology platform, digital platform, whereas you take a picture of that mom and pop shop, you put it on a crowdfunding platform, you tell her story, how long she had this business and what's her turnover on a daily basis and what her ambition is and what she's seeking in terms of funding. In Ghana with the UNCDF team, we are supporting a crowdfunding platform and two types of crowdfunding platform, one that's reward-based and another one that's crowd lending, investment-based, so that this technology and platform just open up the door to access to finance so that, her business, her mom and pop shop, she can expand, she can have a third or fourth store, and she has access to this money by just digitizing some information and building that history that now fintechs and startup can model into a credit scoring and help microfinance or banks or any financial institution to estimate what this means for this woman and her capacity to repay. And this can be done as simple as with your mobile data, how many times you call, and the volume of call credit, you could actually use that as a proxy to estimate credit score. So that's an example of how technology and platforms have translated into more access to finance for customers that are totally under the radar of financial services before. But today, these financial services can offer transaction and services. Another example for us is the way we address youth financial inclusion at UNCDF. And this, oh, by the way, I should mention the program I just mentioned in Ghana with crowdfunding is supported by the European Union in Ghana. And also the programs that I'm going to mention now on the youth portfolio, it's looking at recognizing that we want to build the next generation and we want to make sure that they have the skills in financial education, but also entrepreneurship in the digital era. How do you use these new tools to have access to more information and send more of your information to your prospective customers and leverage these tools as well, not only for payment, but information on your customers so you can tailor your offer. So we work with financial institutions to really build a financial education platform on mobile phone, audio, video, in language, so anybody could use it, understanding how you manage your money, and at the same time leveraging cash for work initiatives, whereas we get youth to leverage the time that they are being paid for some work and train them on entrepreneurship and financial education. So at the end of that journey, they are able to invest in their own revenue generating activities, and they're able to start a relationship with a financial institution, which builds up to access to finance. And with a large component of savings is important. No matter how small that saving is, you can start your journey of financial inclusion, and you can start that journey of trust with the financial institution that leads to financial resources. And in the Gambia, in Guinea, in Senegal, and in Niger, we've been able to support these programs with also the EU support, while in Burkina Faso, the program I mentioned is with Luxembourg support. So for us, these are all opportunities, whereas we're not looking at only the ecosystem, but we're going down with our key constituents, youth, women, rural population, and looking with financial institutions that are in this area and are willing to invest into youth and women empowerment with us so that we can leverage digital technology to facilitate access to finance. I hope that answers your questions, Courtney.
Absolutely. It's a terrific example. So yeah, thank you. I'm curious to hear how the crowdfunding platform takes off. So that's exciting. Just trying to take it up a level for a minute. You've all worked and studied in a multitude of countries throughout your careers. Are you seeing that the challenges are similar across the board, or are there significant differences from country to country or region to region? And if so, how does that impact problem solving? So, Robin, why don't we start with you, and then we'll move through.
Absolutely. So we found in our 2015 Financial and Digital Inclusion Project report that When it came to the metrics we were examining, that I think we'll chat about a bit more later, geography generally mattered less than things like the enabling policy and legal and regulatory environment. But with that said, important caveat that there are definitely some regional trends that we can see in financial services provision. So to give you a little bit of context on how we came to that conclusion, we found when we were looking at the different indicators in our scorecard that many countries were experiencing really similar challenges when it came to some of these big macro issues, like thinking about how to create an enabling regulatory environment for digital financial services. And I think that's one of the reasons that you see networks like the Alliance for Financial Inclusion that comprises policymakers and regulators who are coming together and trying to provide a platform for shared learning across some of these similar challenges. But with all that said, you of course have to consider the context in every given country. Each country has a unique history, a unique infrastructure, a unique political economy. So what we did was we developed brief country profiles, is what we called them in our reports, to help dig into that context a little bit more. And that was informed by conversations that we had with financial inclusion experts in both the focus countries that we were looking at, but also more generally sort of global expertise. So just to give a couple concrete examples, I think Anit was pointing out earlier, mobile money penetration, which has been very, very successful in sub-Saharan Africa, for example. Whereas in some other regions that we looked into, like say several of the South American countries that were in our sample, mobile money penetration was much, much lower. And there were different financial services and providers that were favored, things like agent banking or banking correspondence. And so those are some of the different trends that we see in terms of what provision is offered. But I do think it's helpful, although I'm biased, having worked on the report sometimes, to see those overall different dimensions of financial inclusion, since countries are often wrestling with similar challenges within different contexts.
Anit, would you like to add to that?
Yeah, no, thank you. I think this was really interesting. So again, the report that I mentioned, we looked at a set of about 99 countries, and we took the digital ID, the financial inclusion numbers, and mobile penetration numbers. Interestingly, the digital ID and mobile penetration numbers were more or less equal across different regions and different countries. I mean, at a basic level, right? I mean, obviously, you don't have 5G connectivity everywhere in rural sub-Saharan Africa or rural India, but you still have mobile connectivity, and pretty okay for financial services. Now, the difference in the regional difference or country level difference was in the way financial inclusion numbers came out. And obviously, there's a definitional issue, as I mentioned. We are not looking at informal savings and loan, as Sabine was mentioning. Those are very, very important. By the way, those are foundational financial inclusion capacity for many, many people in the world, especially women, rural, poor women. So we shouldn't discount that while we think of all these fancy stuff like bank accounts and mobile money. So let me just put it there out there. But what we found in this the problem with financial inclusion is the difficulty in changing legacy systems and the importance of doing your new systems better, right? Let me explain what we're talking about. So Robin just mentioned about Latin America, right? Latin America has had decades of financial instability, inflation. So they actually expanded their banking system pretty significantly. So in Brazil, for example, even before the last decade, it was 80% of people had some sort of a bank account, right? Now, when you bring in technology, when you bring in a digital kind of push, how does the banking system in those countries, how do they kind of react to it? Sometimes they are very big vested interests. So they are not interested in reaching a poor person who would keep less than $10 in the bank account, because there is a carrying cost of that, right, to the bank. Now, here, on the other hand, you have, say, a situation, say in Bangladesh, where the formal banking system penetration is very low. So when you have mobile money and there is a provider and there's some competition, you bring in the mobile money as a way of achieving financial inclusion, but it is still regulated, or there is still a problem of regulation. There's still a problem of how you trust the system vis-a-vis a banking system, right? So in a way, you're setting up a new system, but still it has some legacy issues in terms of regulation. But these new systems can take advantage of technology much quicker than legacy systems can change. It's like moving an oil tanker, right, in a narrow strait, right? And whereas here you have a speedboat going through, both have its problems. I mean, the speedboat, you have to be really careful that the waves shouldn't be too high, and the oil tanker should be, you have to understand where the parameters are. So I guess to answer the question, I think, and from a global perspective, I think it's a very interesting time that we live in, when the banks and mobile companies or mobile phone based services are clashing in some ways in terms of their approach. But it's also a very important moment where we can set up regulatory systems to take advantage of this moment. And I think COVID has kind of pushed it, as Sabine was mentioning and Robin as well, towards more like quick foot kind of financial inclusion, be it banks or be it mobile companies. So I think there is a shakeout, or there is at least some kind of an interesting ecosystem developing across the world, where the regional differences will probably be lower than what we have seen before.
Can we stay just a little bit on this idea of the regulatory framework? Because I think that that's an important piece. We talk a lot about the technology, and I think that it's fascinating, and the human stories are really interesting. But then there's the boring side of regulation, but it's so critical. And I think especially when you're seeing this confluence of factors that include this idea of biometric IDs, which I think one of the reasons why it probably will be slow to take off in the US is deep suspicion of the government and use of data, and what does that framework look like? And so, how are you seeing different countries grapple with this regulatory framework? And are there downsides that we're not seeing if this all heads forward without having that proper framework?
I think that's $1 billion trillion question, right? I mean, it's seriously the most critical question. Let me give the example of India, which I know better when it comes to biometric ID. So the idea of the biometric ID was not new. I mean, there are different countries have been doing biometric IDs for years. But what was different in the Indian system was that we're not trying to give out a national ID. That needed change of laws, that needed a lot of other issues. This was supposed to be a functional ID, what we call it, right? So it was supposed to function as an ID, but it also you could enable other functions. So for example, just giving out a trusted ID is an important issue, and no doubt about that. But where we thought it would be helpful for the uptake of this ID system and people accepting the biometrics and all that is when you can see actual use in services. And one of the biggest ones is financial services. And where the regulation kind of kept a bound was by saying that, no, you have to have paper copies of know your customer documents, you have to do this and that. So we kind of basically said, look, you cannot have a bigger level of assurance of a personal integrity than your biometrics. So why don't you move the KYC documentation to eKYC, electronic KYC, right? Now, there was a long conversation between the government and the Reserve Bank and then who are the biometric ID authorities. And finally they said, okay, with these caveats, these things, we will accept eKYC. So now what happened was you went to a bank and you said, I don't have a bank account, this is my Aadhaar number, the biometric ID number. I am this person. There would be an exchange of at least some information. And then the bank officer would say, okay, put your thumbprint or put your biometric. So then the system itself would populate the form in the bank. So you could draw the information of that person from whatever was in the biometric database. And therefore you had exactly what you kind of verified the identity. you verified the data that was coming from the system, and therefore there was no problem in opening an account for this person who claimed, and you could verify that this is the right person. Now, what the bank said is that you have to do a full EKY or KYC. That means you have to submit address proof and this and that if you want the full account, like full benefits, remittances, sending money abroad or whatever. Now, for 90% of the people, we don't do that. We're okay with a limited account. So the regulation kind of brought in this equilibrium where it said, okay, we'll open the bank account, but for the full benefit of that, you have to do XYZ. So that's how about 300 million new accounts were opened in 4 years time. 350 million actually. Every number in India is big, so don't there's nothing to be surprised about. But that was a big push towards getting to where we are today.
Thank you. So I was going to ask a last question of you all that was focused on solutions. I think we did cover a lot of it, and I've taken a lot of the audience time and questions. Was there anything that you wanted to add on the solutions part before I move over to the question and answer side?
Correct me if you allow me to the question, if the barriers are the same, different countries or different region. I would say the depth of the challenge depends on the country. For us, the way we look at it is really 4 buckets, starting with the customer on the skills level in the digital era, going to the infrastructure side, accessibility of digital infrastructure, and then on the innovation side, how inclusive that innovation is to solve a problem, whether it is on agriculture or access to health, it be energy and others, and then the policy side, which you have mentioned. So the way we found, as a lens is through what we call an inclusive digital economy scorecard, or IDES, that help us measure for each of these 4 buckets where a country is in terms of policy, in terms of the skills side, competencies in digital era, and innovation lens, and also on the infrastructure lens, and using that IDES score as a chart from a policy side to make recommendation at a country level of policies to continue developing the digital economy so we don't leave anyone behind. So that's what I wanted to add it before we'll go to the questions.
Terrific. Sounds like a good overview. And Robin, it looked like you wanted to say something.
Oh, yes. Thank you. Yeah, just to build on what was being discussed before, I think the question that you had about consumer protection and privacy issues are hugely important, Courtney. And I think I saw some similar comments in that vein popping up in the Q&A. So just wanted to add on the consumer protection front to complement Anit's comments that it's a hugely important dimension of financial inclusion, so much so that we ended up in our case, in our report, integrating a specific indicator about consumer protection framework into the scorecard. And we found that, assessing different countries' progress toward financial inclusion, some countries will have specific provisions in existing laws, others will have a more fully developed consumer protection framework. And so it was helpful to have an opportunity to go through and think about that piece specifically. And we ended up having a conversation that led to several conversations with different representatives from, for example, law enforcement, civil society. Lots of groups came together because we recognized that all of these issues are very important, but it's really easy for the conversation to become siloed. And so just really underscored for us the importance of people who care about financial inclusion, no matter what sector you're in, having those open conversations to think about things like know your customer processes and regulations, to make sure we're bringing in an equity lens, financial inclusion lens, and balancing all these really important considerations that financial service providers, civil society organizations, and others might have. So just +1 to the comments before.
Oh, terrific. Thank you. That's an excellent point. All right. I thank you, audience, for waiting. I'm now going to turn to the Q&A box And our first question is from Manuel Montez, and he writes, a 2013 study by the Gates Foundation finds digital consumer banking fees in Africa to be unduly expensive, including, for example, on the cost of ringtones that they sell. How does UNCDF avoid this problem, which has also been the case for the earlier version of inclusive finance? And at what point will the volume of fintech operations pose a danger to the incumbent traditional supervised banking companies? At what point will the volume of fintech operations represent a significant element in introducing systemic vulnerability to the banking system? So Sabine, I'll turn to you first on the UNCDF side, and then others can chime in as needed.
All right, no jokes for these questions. I would like to say that from us at UNCDF, the objective is really to get the ecosystem that better serve the consumer. And we are working with all the different service providers, incumbents, the newcomers, whether you're a bank, microfinance institution, fintech, or startup. And we're really promoting partnership. What are those win-win partnerships that brings the banks, the microfinance, and the newcomers, the fintechs together so they can leverage on each other's strength, so that we don't leave anybody behind, because that's at the end of the day, this is what we are really working at, to make sure that the most vulnerable have access and that the services are offered are adapted to them and they are affordable, accessible, so that they're able to use it. And it doesn't come without its challenges, of course. And then you are in a market and different players and some with, you know, market share and others not wanting to collaborate. And that's where our ecosystem approach includes working with the government on the national policy, working with the regulator, the financial regulator, and the telco regulator, so that the regulatory framework is as open to all players, and we're leveling the playing field and hoping that, you know, by bringing that competition, it will also lower the costs and the fees that are on the market, and making sure that we're also facilitating this partnership by putting out some calls for proposal and asking for consortiums to come together to service this specific area where we know there's a tremendous gap in accessibility and these specific customers that we want to service. So it's not an easy answer per se. We are definitely putting all of our resources in advocacy for a level playing field, advocacy for services and products, digital products and services that are affordable, accessible to customer within a regulatory environment where the customer is protected, and hoping that all of the efforts that we're doing with other donors and the government will eventually get us to a more fair playing field and more accessible services for the last mile.
Thank you. Would you like to add anything to that, either Anit or Robin? No. Okay, great, thanks. So I'm scrolling through the questions. I'm going to see if I can bundle a couple, because it looks like there are a few that are digging a little bit more into some of the consumer protections, and I know we talked a little bit about that. But I wanted to make sure we fully covered that. So Anne Ryan asks about digital security and repair. Are they factored into last mile services, and are they explained to users? And let me see, I knew I had another one. And Reese McCardle asks, what exists for things like deposit insurance for banked money and credit scores for the credit? So are there any, again, kind of going to some of the safeguard questions? Who wants to take that one? Let's see. Anyone want to volunteer?
I can start.
Okay, great.
No, I can start with the first question in terms of the cost of repairs and the cost to the customer. It is interesting. Where I work mostly is in West and Central Africa, and the business of repairing phone has become an economic opportunity for youth or people within the communities, because, you know, the accessibility of the phones are there and people are revamping the phones and are able to be reused. So for us, we encourage the private sector to come up with opportunities for last mile. We really push for these accessible, we really push for programs that would facilitate access to a device, whether it is through a bundling offer in terms of pricing, or it is through a pay-as-you-go system, whereas somebody could pay, you know, maybe $2 or $3 for a year to be able to have access to that phone. Those are the type of initiatives that we try to bring forward to make it more accessible to people who are in at the last mile and working with the private sector. But and encouraging as much as we can how to lower these fees. But it's a tough question. At the end of the day, there's an economics that providers are looking at when they're making their offers. And to some extent, for us, UNCDF, we see ourselves as our role of, with the ambition of leaving no one behind. How do we get the private sector to go where they wouldn't normally go because the business case is not there? And we've had year after year proven by doing pilots, specific pilots, and bringing all of our technical assistance support that it is viable to go into these areas and that you can service customers, and it becomes a good equation for the private sector. But it certainly is a long, journey that we still continue with.
Great. Any additional thoughts on that? We have a question from John Allen. Let me see if I can find this one. He's asked a lot of great questions. Asking about, are you familiar with the DNA of financial instruments to be able to track every transaction? I think that this links to a question that I had myself and I wanted to ask. So basically, blockchain, how is that going to affect financial inclusion? What do you see looking as that becomes something that is more integrated into everyday life? Takers? Robin, Anit?
I see it as, oh, go ahead, Anit. I'll be happy to add.
I was trying to bunt the question to Robin or you, but since I just unmuted my mic. I think I come to this question of different technologies from complete and agnostic standpoint. Blockchain is just one of several very established technologies to track financial transactions. Now, whether blockchain is the technology, I don't know. But can blockchain be a technology for a certain kind of financial transaction? Yes. But I think this is where I think the debate gets a little bit polarized as to blockchain versus non-blockchain, or this versus that. I think the question of DNA of transaction is critical because principally because of AML CFT laws, right? So you have to track transactions that are coming from somewhere, going somewhere, and you have to track that whole process. So the more we can use data either in the established way or in different new systems, that basic principle has to be adhered to. And that's where I come from. And again, as I said in my biometrics intervention, it is not as if you can't do a check without biometrics. I mean, you can't do a verification, identity verification without biometrics. It is probably today the cheapest and the best way to do it. And maybe later on, the people will find something else, maybe a DNA print or whatever, but that's in the future. But today, it is still probably the cheapest and the best way to do it. And that's exactly my response to the blockchain question.
Hey, Anit, if I can add to that.
Oh, sorry, Sabine, yeah, go on.
No, if I can add to that, I come from Africa, and oral history is, for a long time, this is how information passed on in the years. Imagine today, and a lot of it got lost because it is oral history and it's relying on somebody else telling that story. So the validity of finding a way to have the DNA of a transaction that stays locked in a way that we can find it after is huge. It has huge potential on the future of finance and everything that we're doing. Yet, blockchain has to prove itself, give us these use cases and successes over the years so we can, all see clearly this is the value proposition. We see it in this area. One example, for instance, at least from some of the stuff that I've read, is that the blockchain in terms of land registry, for instance, it's huge when you look at it. From Africa and other regions, it's being able to do these transactions and have the history in a way that we haven't been able to do it before. So I think for that perspective, we see it as an opportunity area to look into and see what are the use cases where blockchain is proving to be tremendously changing the way we live or the way we use data or the way we record transactions, and see to what extent how this is going to build a future that we can live with.
Thank you. Robin, I do want to turn to you quickly on this question too, because I think when it comes to COVID and financial inclusion and these 1 billion people who have now gotten into this system, you know, it makes me think a lot about the conversations around things like universal basic income, and where that intersects with blockchain and I guess your own work on corruption right now. So I'm going to take three big ideas and kind of mush them together and throw them over to you and see what you come back with.
That sounds great. I mean, I think on the anti-corruption side in particular, I mean, one of the benefits of advancing financial inclusion is that the more people you draw into the formal financial inclusion ecosystem, ideally that means the more transactions are subject to regulatory oversight. And so that can be really helpful for monitoring and mitigating against some corruption risks. On the blockchain piece, I think to sort of build on what was said earlier, and since it's relevant to this question as well, I think we had a very similar perspective when writing our report that blockchain technology can be very valuable, but it's also really important to remember that, like any technology, it's not invulnerable. And so when we think about fintech providers, new and emerging forms of financial services, it's really important to still remember that investing in cybersecurity upfront is important for the providers and also for the customers, sort of linking back to that customer protection element that we discussed earlier. So lots of benefits, again, to transitioning to digital financial services, but really have to bear in mind that, like with any other type of service provision, there are some important risks to mitigate against to protect consumers.
Great, thank you. And thank you for dealing with my mishmash of a question.
No, it's great, that was fun.
So we do have a couple of questions in the chat that I want to pull together because they're both on the same topic, and I think we could probably end there. And they have to do with why haven't systems like the one that you mentioned in India, Anit, or others, why haven't they been adopted in developed countries? Why haven't developed countries adopted some of these approaches, and how can we convince politicians that democratizing access to financial services should be a priority? So a lessons learned flipped. What can developed countries learn from the leapfrogging that has happened in the least developed countries?
Yeah, I think I love this question coming from a developing country perspective. I think it's again, I go back to that legacy system approach, right? You have some systems which are set up, you believe in those, but you need to be able to understand where other advantages are in other systems, but that's difficult to do. So one thing about developed country systems is to be humble, to say, what's happening in Kenya? Let's look at this. How can we learn from India? Let's look at this. The second, I think, and there was a question about this, about why systems like Aadhaar haven't propagated to developed countries. Systems like Aadhaar or biometric-based ID systems are now in about 100 countries, right? Including some countries in Europe, like Estonia, is probably at the frontier of biometric ID systems. It is in countries which have resisted having any form of an identification system, like Europe, like in UK, like in the US, which have the biggest problem with this, right? Now, again, this is a choice that society makes. And this is about debate and about discussion. But in the end, what is it that you stand to gain or stand to lose? You make that call. And then you see what's available. And that is difficult to do, again, with legacy systems. For example, would you add a biometric layer to social security number? I don't see it coming very soon, right? But you could do it if you wanted to. It's not rocket science. But again, I don't see, that is probably a biggest reason why you would do that. The last point, and I'll end there, is that some, for example, mobile money systems and the trust in mobile money is a trust about who is sending that money and who is receiving that money. Now, if you can ensure that trust between the sender and the user, there you can actually break a cycle of all these transactions and trackability and things like that. So I think the developing countries, because they have moved to these systems faster, they realize that, well, we need something which actually ties these two together, which is a biometric ID.
Lessons learned, Sabine.
You know, I'm not sure I can actually answer that question. What I see is that the economy is going digital more and more, and there is a necessity for all of us and a responsibility to make sure that we are not leaving anyone behind in this digital economy, that this is not becoming a new, a factor of division between the haves and don't-haves. And that's where UNCDF plays. It's, putting all of our resources, technical assistance, policy support, grants and investments, and all of the tools at our disposal to make sure that we are promoting inclusive digital economies and we are not leaving anyone behind.
Great point. Robin, any final thoughts, lessons learned?
Yes, absolutely. So we did focus mostly on developing and emerging economies for our report. But I think it is absolutely true that there are a lot of lessons for us at home, like in the United States, where I am. One of them is thinking about, for those who do have access to formal financial services, how do we make that process more inclusive and more manageable for them? I think about things like the fees that many people have to incur to do things like cash a check or have a maintenance fee on a specific account. And there's that saying that it's expensive to be poor. And I think that there are a lot of ways in which the United States and other developed countries can think about smoothing and enhancing the experience for folks who are using financial services based on the lessons we've learned from other countries around the world.
Terrific. On that note, we're over time. So thank you all so much. I want to have a big thank you to the UNCDF for partnering with us on this talk. Sabine, Robin, Anit, thank you so much for the work that you do. It's wonderful just to hear just how these trends are shaping the world that we live in. So we really appreciate the work that you do. It was a pleasure to have you here. And thanks to everyone in the audience for all the great questions. Our next event is Thursday night at 7 p.m. So we're going to be talking about tensions over Taiwan and what the implications are for US-China relations. So please join us. We would love for you to come and spread the word. And that's with Dr. Karis Templeman at Stanford. And with that, we have taken too much of your time. So thank you all. And I really appreciate having this fantastic conversation. Take care, everyone.
Thank you.
Bye-bye.
Bye-bye.